Hello, everyone. Thank you for joining us today for a topic which is of interest to all of us as in entrepreneurs, Budget 2022 from SME and MSME's perspective. I'm Preeti Shah, a director and a company secretary of Shah Investors Home Limited, an ASCENT member of Shakti Trust Group. We are SEBI registered financial service provider for more than 1 lakh clients. And it is completely a pleasure to moderate this exciting webinar session. Let me begin with introducing our esteemed guest for today, Mr. Manal Singh, who is the CEO and CIO at InCred AMC. Mrinal has an MBA degree from SP Jain Institute and has over 12 years of experience working with ICICI Prudential. Over to you, Mrinal.
Thank you, Preeti. Thanks for the nice words. What I'll do, maybe I'll, as per the agenda, I'll just upload a presentation, and subsequently we'll open the floor for questions, which is what I'm looking forward to. So let me just talk about what I think is the screen visible? Okay. Yeah. So what are we talking about now? I think you must have heard a lot of positive words around even in the past, but I think the incredible India journey has begun. And when I say that, I basically mean on the ground. This economy has always been about job growth. It has been about income growth, and I think that has been languishing for quite some time. And now finally we can see clear signs of things moving in the right direction. So let me just get to the point. What is it that we are seeing? If you look at IMF is talking about 9% GDP growth. If you look at the government tabled the economic survey before the budget, and they talk about 8.5. The number can be anything, 8.59. That's not the point. The point is that India is going to grow in double digits because this is real growth. Nominal growth will be 12 to 15, somewhere in there. And the size that we are, it is a meaningful number that we are talking. We have also seen almost 1.6 billion doses being administered of the vaccine. I think the worst of Corona hopefully is behind us. We should be done and dusted with Omicron in a month or so, and it should be more or less in control. I think societies globally are getting used to, living with the COVID or protocols that are required to conduct business with COVID lurking around in a small way. So I am trying to, what I'm trying to say is, things potentially could look to, normalize. Now, but if I look at the budget, in the budget, budget typically like a budget, budget is, what is the budget? Budget is an intent statement about where the government of India thinks their revenues will come from, where do they think they will prioritize their expenditure, and what is it that they are going to do on a broader level for a long term. Now, the revenue collection part is what will drive what is the expenditure going to be. The intent on where they want to spend will be the driver of growth. So when I see the budget, the finance minister in the budget actually mentioned that for the month of January, the GST collections were 1,40,000 crores, which I think is a very good number. Compared to 2-3 years ago, GST monthly collection number used to be 90,000. It has moved up to 1,20,000, 1,30,000 for almost 3-4 months now. So, and the government has budgeted quite low number on, I would say, GST collection. I think if the momentum continues, if the economy grows, the government will be in much better phase and shape to be able to spend in the economy, and what they will spend upon, we'll subsequently talk about it. Interestingly, a lot of people have asked me this question, and I'm sure this will be one of the questions that audience will come up with. Why is it that crude at the level it is elevated? Why is there no hue and cry this time about it? Interestingly, in the last 25 years, and in fact, there is no history before that about this logic. This is the first time that I'm seeing that our IT export itself can take care of crude imports. So we are able to fund our crude imports. In any case, elevated price of crude are not sustainable. It's a fossil fuel. The global economies are drifting away from it. So that's not a cause of worry. It's an imported inflation. It needs to be tamed, but it needs to be managed, but there's no need to panic. In the meanwhile, our merchandise exports are doing very, very well. And that is, in my view, the driver of growth, the driver of where SME should be, and it's largely in the domain of SME and MSME. And we have made some strides as an economy in ease of doing business, which makes us more appealing as an investment destination. We also have a lot of new businesses getting registered. If you notice this graph with the arrows, and they are largely in the zone and sectors of manufacturing and agriculture. So it points to the direction where potential business opportunity is kind of showing itself. Now, what is it that we are seeing in the economy? What is it that the government is trying to drive into? As of now, we see very robust demand on the export side, and particularly for areas and sectors which are China plus one beneficiary. And that's an official statement. That term has kind of unofficially got coined, I think, by even the government and the bureaucrats and the policymakers. I think what is happening post-COVID, a lot of leading global corporations have wanted to de-risk and diversify themselves out of China. So their supply chains are way too dependent on China. China is even now closed. As if you go to China even today, you think you have to be quarantined for 2 to 3 weeks. That's too much of a problem for conducting business. So most global corporations have kind of looked for alternates for their supply chain, and the sheer shift is so large and huge that even if 10-15% moves here and there, it can quadruple or triple the capacities that exist. That's happening to quite a few sectors in India, particularly areas like textile, engineering, goods, chemicals, APIs, pharmaceuticals, and the likes. In the meanwhile, we have also seen last decade of deleveraging balance sheet by corporate India. That includes the MSME. We've also seen post the Ladakh standoff, government actually stepping the pedal on Atmanirbhar and basically moving in the direction of making India less dependent on Chinese imports in particular, although don't say it like that. But then the government PLI scheme is more or less targeting areas where our dependence on China is too high. And we've never seen such conducive rates to borrow money to be able to invest for corporations. And this can potentially result in very good demand cycle. Let me go back to what we've seen in the last 20 years and why I think there is a repeat of 2000 to 2010 that is going to happen in the economy in particular. So if you notice, if you can see my cursor, between 2000 to 2011, that is roughly the 10 years, the first decade of the millennia, the corporate India, that is the entire corporate India, was investing or expanding capacity at 30% CAGR, which resulted in revenues growing at 21% CAGR and profits growing at also 21% CAGR. It's a very interesting data because the entire India, this was genuine growth happening. There was a lot of job generation. We had multiple years of high GDP growth, but then the driver of those growths was capex done by government, but done by corporates, private consumption, and things like those. And because it was being fed by 13.5% growth in cash flows, so there was a gap because investments were at a rate double than the cash flows. The businesses, the corporates were actually leveraging and expanding capacity, and demand was growing at such space that it was required that you set up capacity to be ahead of the demand. Otherwise, you would potentially lose that business. In the meanwhile, as a barometer of economy, we saw Nifty move up by 6 times. We also saw the manufacturing part of economy move up almost 9 times. Now that is the phase that we saw, 2003 to 11, or let's say the first decade of the millennia. Moving ahead in the last 10 years, what we've seen when the GFC happened, some people call it the Lehman crisis, some people call it GFC, there was a demand shock. So we had, the demand shock hitting the economy. And finally, by 2010-11, we had most businesses getting laden with excess capacity. They had borrowed to create that capacity. And a lot of NPAs and provisioning had to happen. It took almost 10 years for that correction or consolidation in the economy to happen. So we had next to none growth in capex. So the last 10 years capex growth has been less than 2%. In fact, if I take out the PSU, refiners, and Reliance, it is negative. And the cash flow continued to grow at the same pace. So what was being done? Basically, these cash flows were being used to run down the debt on the book of the MSME and even large corporates. So at the end of it, we had a situation where we have very good balance sheets, largely in the corporates. We also have seen that lack of capex results in very suboptimal rate of revenue growth for the industry and also suboptimal rate of profit growth, which basically means, the driver of growth in India is basically expansion of capacity, capex, physical infrastructure that or government public infrastructure and private infrastructure that gets created. Now that is the driver of economy. That is what I think the budget has finally stepped the pedal on, and government finances actually let us do that at a federal level. So the government capex, it's the important parameter. The government talked about in the budget 35% increase on the capex number. I think that's real. We are talking about 7.5 lakh crores there. It's a very, very significant number. Government will do and prioritize what it has always done, which is infrastructure, things like, road, rail, port, power, not necessarily power, but let's say water and things like those. We also have, given China Plus One driving the demand, we have the private sector now talking about expansion of capacity. Now, the interesting part is that the future is green. Like 2000 to 2011, there will be, the headings will be same. There will be expansion in power capacity. There will be expansion on, let's say, chemical capacity. There will be expansion on refining capacity. There will be expansion on other discrete manufacturing capacity and like those. But the power last time was thermal. This time it will be renewable. It will be solar. Chemical companies will expand, but they will also invest significantly into better effluent treatment plants, zero discharge, sustainable ways and methods of manufacturing. So things like those. So the future is green. That is very important to know. So the future, be it large, be it small, be it mid, the future is green. The private sector capex will be largely green because that is the future. Government will invest into physical public infrastructure, urban transport, expressways, road, rail, ports, water, things like those, and they'll continue to do that. So we are walking into what I would call the golden era of Indian economy in the next 5 to 10 years. And needless to say, at some point, housing upcycle, the residential housing demand had never gone away. We are going to see revival in that demand at some point when we start seeing better visibility, because manufacturing creates the kind of jobs that are unparalleled. Services cannot create that kind of jobs that a manufacturing part of economy can do. So let me rush through things. IMF says that we are $2,200 per capita. We are 300 million households. We are going to 400 million households in the next 7 years. When we grow from $2,000 to $3,000 per capita, there is a standard set of consumption patterns that households do. We are going to see Indian households spend more or healthier way of life, individual mobility, education, communication, entertainment, recreation, travel, durable. These are spaces that Indian consumers will spend in. It is not new. It is every economy which has gone through that phase had done that. This will be no surprise and no aberration either. So we are going to do that. We can say that IMF is claiming us to be double by 2030. It could be earlier if things are better. It could be later if things are okay. But the trajectory is positive. We are talking about a very large economy like India growing fastest and becoming almost a double, which is not an ordinary feat. We are in the midst of amongst the most promising merchandise export scenarios that we've seen. We have already clocked by December end $300 billion of merchandise export. Now, this is a very, very interesting data. And we are on track to do $400 billion of merchandise export. I mean, in Corona, where there is so many disruptions around, including supply chain disruptions, we are seeing such robust numbers. It has grown 25%. And this is besides the services export. Services export is another $250 billion. So what am I saying? Look at the sectors. Engineering goods, back-to-back double-digit mid-teens growth. Look at agriculture-related equipment, 15%, 19%. Now look at textile. Now this is China Plus One for you. 20% back-to-back. Yarns, another 20%. Iron, steel, another double digits. So we have multitude of sectors which are actually benefiting. This is very, 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 very logical in terms of beneficiary of China Plus One demand. As of now, export is driving the demand. We will finally see the domestic demand getting revived. So businesses which are aligned to chemicals, engineering goods, API manufacturing, drugs, yarns, textiles, commodities and the likes, and more so, definitely are going to benefit. Other sectors will come and join, but as of now, this is going to be a major driver of opportunity and volumes. The PLI, look at it, 2.2 trillion. Now, even if you say that there is going to be 60% profit, it is still a large number. That itself is an investment in the economy. And what investment in the economy does, we've already seen in the first decade of the millennia. We are talking about 20% plus CAGR on investment in the economy could be significant driver of revenues for businesses across the board. Some people will do better, some people will do not so better, but the growth will be positive. It will be the next 10 years growth in Indian economy, corporates included, will be far higher compared to the last 10 years. It will be in conjunction with something that we've seen in the first decade of this millennia. And I think the foundation of tax reforms, the foundation of policy reforms, labor reforms, foundation of debottlenecking of infrastructure, all has been done already. So we are sitting at the cusp. The only thing that was missing was demand, and we were waiting for it. Now I think China Plus One has thrown opportunity, which is significant, and it is driving. Even look at announced capex. This is large corporates, this is mid corporates, this is renewable, this is PSUs. We are talking about almost 5.5 plus 1.5, 7 trillion rupees of capex already announced. Even if half of it happens, let's say, not even full has to happen. Even if half of it happens, significant, investment is going into the economy in the next 5 years. PLI above it, I've not even put government numbers into it. If there was any doubt what the government's intent is, I think the budget has put that to rest. So I've not stepped into the direct taxation. I think there will be questions around it. But then housing, we are now at a cusp of, having absorbed a lot of finished goods inventory or finished inventory in the housing space. There is going to be significant upward trajectory in news of new projects getting launched. There is going to be increased activity in housing space. And mind you, housing is the largest employer in the nation. The largest employer in this country is housing. So if you have to pick up the job generation, you have to drive housing cycle upwards. So that is what is going to happen, maybe a bit later in the cycle, but that is now bound to happen at some point. We as an economy have entered the virtuous cycle that we have been waiting for. Capital investment, driving ancillary services and employment generation, financing opportunities, driving the consumer demand, and this cycle can go on. So if we get things right, I think the virtuous cycle is there for us to now see. I think it is a very, very great time period for us to be around. This is going to be definitely an incredible journey, and all of us are part of it. This is destiny that we'll see in front of us. So I'll just rest it at that. Preeti, I think I can take questions.
Thank you, Mrinal, for the great insight over the topic. We have received few questions in advance from our participants. I'll take them first, and members, please use the chat box to ask the questions to Mrinal. So first question I would like to ask, that the shortest budget had even a shorter part to offer to SME and MSMEs. Is there anything that which we are missing to notice?
See, let me be candid, Preeti. What has happened? The corporate taxation used to be mid-30s, and now it is 15% for a new setting of capacity. I don't think the government can go lower than that. So we've hit a bottom in terms of how low the tax can be on the corporate side. In fact, there is too much hue and cry that direct tax is almost 40% and corporate tax is 15%. This anomaly cannot sustain. So that's another topic. But in terms of incentives for industry, I think the multiple times the FM speech, which was the shortest I've heard, was about MSME. In the economic survey 4 years ago, when Arvind Subramanian came up with the economic survey, I've read this. 95% of the formal employment in India is in MSMEs. So the policy makers' initiative is always going to be around, doing things which are going to be significantly beneficiary to that sector. There is simply no two ways about it. The large companies anyway can find their way, but don't go by the speech. Yeah. The speech is just an intent statement. It is more political in nature. It is about getting the I would say attention. In fact, at the current FM I've seen compared to last FMs, she never makes a mention of defense budget, which is the largest item in the budget. She never does that. It is 3 lakh crore plus. She never does it. Direct taxation, she always leaves it. Okay, you can read it in the paper. The real finance bill is the devil in the detail. There is stability in taxation now. So what we know is, that whatever is that, we can dispute it, is it good, bad, high, low, or whatever. But now there is stability in the taxation regime. We know there are incentives. PLI is, an incentive on the top line. Taxation rates being low on the corporate are incentive on the bottom line. China Plus One is driving so much of demand for few sectors. It will finally flow into other sectors also. It has been the most conducive environment to borrow if you want to invest. We have the most conducive environment to access capital even from capital market. We can still complain that we are a free country, but I've never seen in last 25 years stars being aligned so well for India. It is up to us to figure out how to make the most of it.
Agree. Thank you for that detailed explanation. So there is a question that how are metal companies like Tata Steel, SAIL, Shah Metals, etc., going to benefit due to provisions in affordable housing sector?
See, first of all, steel is a global commodity. The biggest consumer, so the prices are decided globally, unlike cement. Cement is a local commodity. So cement price in India can be different from cement price in Japan, let's say. But steel is quoted in dollars and steel is a global commodity. So global demand outlook drives the prices of steel or base metal prices. When we get back to investing in infrastructure, housing, and things like those, they are a big consumer of things like steel, cement, and the like. So when you are going to expand, let's say, manufacturing capacity, you're going to build bridges, ports, airports, expressways, and things like those, there is a significant portion of steel that goes in. Urban metros, and things like those. So will there be an uptick in demand? Definitely yes. And we are already seeing a lot of steel companies engaging in conversation for setting up increased capacities or expanding in a brownfield way, as they call, and even through acquisition. We recently had, the name you took, Tata Steel, acquire Neelachal Steel, and FM also mentioned that, so I can take that name. In the speech, it is public news now. So I don't want to comment on, so I have not commented on market. I have kept it separate. The economy is going to go in a very, very good direction. Market will have its own swing, but finally market will align with reality, and which to me is looking up only.
Yeah, agreed. So the next question we have is, what are the new reforms the government has proposed in the budget?
So let me disappoint you by saying there are no new reforms. The bucket of reforms are largely done. It's only consolidation of reforms. The only incremental thing that they have been overemphasizing on is green. Driving economy into the green direction and creating some incentives, or at least, so the PM Gati Shakti is a new word used, but it is something that we've always seen in some garb or the other. Realistically, I would say, because I've seen so many for 2 decades plus, I would say when you walk into an election year, you don't see big bang reforms in a meaningful way. I think government will be more than happy to see the reforms that they've done. See, GST is a reform that this government had brought. It's by itself a big reform. We have seen corporate tax being reduced less than half. It is a reform. We've seen ease of doing business. So a lot of reforms have already been done by the government. I think they are consolidating that reform. They want to actually get the private sector to get back into investment mode, and which I think we are seeing clear signs now. So sorry, I don't give you an answer to it because there is none. The reality is that it is a consolidation of reforms that we are talking currently. No new big bang reforms. There is nothing of that sort. There is enough already that needs to be consolidated, which is happening.
Another question is, has the MSME criteria finally been changed based on the notification 2021 to turnover based?
So there is an MSME definition. There is a startup definition also. A lot of startup discussion also happens. I have not looked deeply into this definition in particular, if there is an incremental change. But in my mind, the policy framework is anyway quite beneficial. Where is the borderline? I think it might be relevant to individual businesses, but I have to get back to the audience. Maybe that is there a change which is meaningful or something that is substantial?
Right. Another question is there a system to come up with a budget for SMEs?
In fact, we used to have a rail budget earlier. Now it is also clubbed with the union budget. There is a ministry dedicated to MSME. So you can assume the allocation to that ministry is a budget to that ministry, because ministry also has to plan for whatever allocation they get and all that. So there is not going to be, I don't think there is going to be separate budget for MSME, but definitely the allocation to that ministry itself is the budget.
Yeah. Next question is, will the budget boost growth? Will the budget create employment? Your views, please.
So excellent question. I think that is the most relevant question. Budget will aid growth. The growth is already on track. And because government is such a big gorilla in the game, if government is able to up the investment level in the economy by even 2-3%, it makes a significant difference to the pace of growth. I think which is what we are now seeing clear signs. Job growth. See, whenever if I look at history, and in fact that's an NSSO data even today, as I mentioned, housing is the biggest employer. So uptick in housing creates a lot of jobs. Uptick in manufacturing creates more jobs than uptick in services. We are seeing very robust growth in services in India as of now. And I think we are at the cusp of manufacturing revival. Manufacturing revival followed by housing. I think we'll see very good job generation going ahead.
Thank you. Next question I would like to ask is, how will the budget impact inflation? How will the budget impact industries?
So I think this was the fear that budget would have started with. So when I look at the fiscal deficit number at 6.4, I think the government was quite hell-bent upon achieving that number, at least in the calculation. So their estimates both towards revenue and expenditure, in my view, are in a way guided or influenced by intent to achieve that number. And fiscal deficit is a serious number on inflation. I don't think inflation is that bad a thing. A controlled inflation, which RBI has defined within its tolerance range of 4% plus minus 2, I think is fine. We are at upper end of it, 5.5%, and so. Imported inflation is the problem. So if crude is driving inflation, I think that's a problem. I think that can be handled as we speak. There's no reason to panic. But if there is inflation, let's say steady, modest inflation in, let's say, in agri commodities, I don't think that's a problem. 2-3%, 4% in agri commodities is fine, because that's income going to rural India, and that is also a big part of economy that drives consumption in some form. So domestic steady, slow inflation is all right. It shouldn't be 10% and all that. It should be 2 to 4 or somewhere around there. But imported inflation, that is crude and likes, that is a problem. I think we are not facing a harsh scenario over
there. The next question would be, you have mentioned this in your PPT, but you want to add that your views on the future of India.
Because I am trying to make a serious effort to sound not so upbeat. To me, things look very, very good for India. On the economy side, I don't know how to not overemphasize enough. But if you are somebody who's looking at things 5 years hence or something, the economy is amongst the best shapes. The corporate India is in amongst the best. So we haven't seen the stars aligning in such a meaningful way. We haven't seen government balance sheet in such a good shape. We haven't seen corporate India in such good shape. The only thing that was missing was demand. And I think China Plus One has come in, PLI has stepped in. So there are segments which are benefiting now, there's no doubt. There is some languishing part of domestic demand, particularly, let's say, urban demand. In some form, I would say things like, high ticket items, discretionary in nature. There is some dip in those numbers, let's say mobile phones, maybe TVs and all. But that's temporary in my view. Once income levels start looking better, it is difficult to even assume that what will be the next month growth. But if you ask me, the trajectory looks very good.
Yeah. So I'm liking the part that, and I'm sure the whole member will appreciate that you're talking about with the data in hand. We all know that India growth story, but when it is backed up with the data, it adds a lot of value. So thank you for that. The next question, just a second, I would like to ask, just a second, sorry about that. Is views on tax on all digital assets, including cryptocurrency and NFTs?
So the most talked about topic, by putting tax, has crypto become legal? The answer is already in the public domain. The answer is no. The finance secretary the next day came and clarified by taxing digital currency, we've not made it legal. So every individual is responsible if they lose some or all their monies in crypto. The government has time and again. So the crypto bill is pending. The government has introduced digital currency, which I think they are very clear. This is going to be the only digital currency, if at all. It will take some time, given my opinion about how things will move. It will take some time before it comes on stream. Crypto is not legal. The legal outlook is unknown. People who are putting monies in it are actually doing it at their own risk. This is not what I say. This is what the government says. So I don't have to qualify my opinion on it. It is there in the public domain. In fact, if you go to Google and look for Finance Secretary Somnathan view crypto, you will get the answer.
Yeah, I agree with you, sir, for this. So the next question I would like to take is, how do you see e-commerce strengthening its share in GDP?
So, e-commerce is here to stay. And what lockdowns and Corona has done basically is accelerated the adoption. Things would have happened, let's say maybe in 4 or 5 years. Now it is already there. So e-commerce has gone into food delivery also in a significant way. So it is here to stay. It is, we like it or not, it is going to be around. It is because the consumers want it. And that is a faster and efficient way of reaching consumers for manufacturers. I think it will coexist with the brick and mortar way of distribution as well. So will it become bigger going ahead? The answer is yes, maybe. But the economy itself is going to be so big that I think there is space for both of them.
Yeah, right. Next question I would like to take is that after RBI launches its digital currency, do you see cryptocurrencies getting legalized in India? Now that was the question, I think, after you had answered that previous
I think
question.
there might be at least 1 million people in India bothering about it even now, maybe more. It is worthwhile to go on the Google and just type what I said, Finance Secretary Somnathan crypto. I think they have made it very, very clear that by taxing or launching digital currency, crypto does not become legal. They are saying, wait for the crypto bill. We don't know what is crypto bill. It will come and whatever.
Yeah, we can. You are audible. Yeah. So I think question related to that only. Do you see digital currency being introduced as a tool to curb black money?
I think it is to pacify a lot of people who think digital currency is future. Let's not confuse blockchain with cryptos. No, blockchain is a technology which might have a meaningful impact going ahead in a variety of ways. Crypto necessarily need not be the right method. Well, in any case, is it legal or not is a matter that the sovereign will decide in consultation with people. But do I think it curbs black money? In fact, the evidence points in other direction. Cryptos have been used by people with criminal intent.
Yeah.
There is actually evidence for that. It can be curbed, but that's another matter.
Yeah, I agree. There's one more question. I think there are two more questions. Do you believe it's the need of the hour to announce initiative for digital learning?
Digital learning, maybe I don't get that. I think, even 20 years ago, I remember UGC used to be there, University Grant Commission. There used to be channels being beamed for IGNOU University education. I think education dissipated through whichever mode, physical, digital, electronic, internet, there is adaptation for it. Maybe I'm not getting the question rightly, but to me, the obvious answer is yes. I think this is it's anyway happening. I think most kids are not going to school these days. They are, we're doing digital learning only, but it's also depriving them of peer interactions. So I think the hybrid is the way forward.
Yeah, I agree. For hybrid, it is in fact a blessing, what I feel. Yeah, so the next question is, To add to the previous question, what about mental health initiatives? This topic is picking up on mental well-being as it's absolutely important for entrepreneurs. And I agree with this. That after this
Excellent
lockdown and
point.
COVID.
Actually, at this thing, even finance minister mentioned in the budget that NIMHANS will do something around that. So I think it's good that there is recognition that something of that sort is required. And it is being recognized at the highest level of democracy in the parliament. So let's see what exactly comes across, because budget is a proposal, finance bill, when it is passed, becomes law. So there is allocation in that direction, there is recognition of that. So I think it is no longer being trying to push that, okay, mental. I think as a society, we have started to accept that depression is something, mental health is a segment of health that needs to be bothered, cared, and consulted for.
Yeah. So I think after this COVID and this pandemic, mental health is for including doctors. I think they have suffered the most in this scenario. Yeah. So another question I can see is that how is service industry?
Service is growing robust. I mean, to just give you, let me put some data in the picture. I talked about 400 billion. I talked about $400 billion of merchandise export, to $50 billion of services export that India will do. So that adds up to 650. Let's say even if you fall short, somewhere between 600 to 650. Just take a guess. What is the export merchandise export of South Korea? 650. Yeah. What is the merchandise export of Japan? 700. What is the merchandise export of France? 550. What is the merchandise export of UK? 600. People are not talking about it. We are there. There are only 3 economies in the world which do more than $1 trillion of export, which is China, Germany, and US. I think in 5 years we'll be there.
Wow.
So we are big. The destiny you can be part of, or you can watch it from outside. But it is getting there. It is destiny now. We are getting there. We are already the size. So talking specifically about services, services is not only ITES, it is also all the revenue receipts for tourism and all. France is the #1 destination of tourists in the world. The largest number of tourists get to France.
Yeah.
It has a very budding aeronautical industry, Airbus and all. France exports services of $250 billion. India also does it. So in services, in the world of services, we are a gorilla and growing. This is the crowning glory of India's human talent on display to the world, and basically in some form, if I may use the word, conquering the world. Yeah. Services, world knows it. If you want services to be sourced, India is the first destination. Services is a success story which is a hallmark of Indian human capital. Manufacturing was the missing part, which is going to join the bandwagon, is what I think.
So there is one more question which is related to this only, that how is the service industry going to be after this budget?
Sorry, how is the?
After this budget, how is the service industry going to be?
Oh, the budget has nothing to do with services industry. I mean, the reason ITES got developed in India because the government forgot to have a ministry for it in mid-90s. And see, that is a reality. In India, generally, any industry has come up largely first feeding export and then finally gaining domestic market also. That happened to IT. That happened to a lot of autos, that happened to a lot of engineering companies, and that is going to happen. Textile is the same. So we are going to, because first level of scale comes from large global demand, and then finally it seeps into the local economy. So I think services is doing well. Services has the best advantage about services is that there is hardly any government intervention. And it is on the back of that strength that we are able to afford import of crude, because crude is energy. It might not be 5 years hence, but today we need energy to make our economy grow. So as of now, we are an energy importer nation largely. So our import of energy is being funded by our services exports. So they have a significant contribution to make our economic growth viable.
So I think as we are close to winding up this session, I request Ruchika to please put up the feedback poll here. Request all the participants to kindly share your feedback with us for today's session. It will not take you more than 30 to 40 seconds. Your feedback is extremely critical for ASCENT team. Thank you. And I think we'll continue with the question and answer session. Give me a minute, please. The question which I am having is, are you ready? Should I go ahead, Manal Singh?
Yeah, please.
Okay, yeah. So with the all right steps being taken by government for long-term growth, when do you feel India can be a bigger manufacturing hub than China?
Well, that's a long way to go. See, China is manufacturing capability is very, very big. To just put another set of numbers, we are talking about $400 billion of merchandise export. We are a 3 trillion economy. They are already a 10 trillion economy. They are doing 2 trillion, more than 10 trillion economy. They are doing more than $2 trillion of export. So just to give you another sense of their size of export, they actually are exporting merchandise, almost equivalent to Germany and US combined. They are so big. So that is the whole point. Even if 10% of that manufacturing shifts to India, now we'll have to expand capacity by maybe 4 times, which is the game I can see. So let's be candid, let's be clear. In jingoism, we can say we'll be better than China and sooner than you blink the eye, but the reality is it will take some time. I think it will take us a decade to be considered respectfully large in the merchandise goods manufacturing landscape of the world. Maybe 5-7 years we'll be able to see it, but in a decade will be significant power in that space.
And a decade is not a long way to go. We'll definitely reach, and your green story has, I think, quite convincing. So is there anything else which you would like to add, that if you're expecting that some questions which we participants needs to know, or you want to add something here?
So I think I am surprised there are a lot of questions on direct taxation. I think that is something that is a lot of people want to talk about it. Budget means pehli cheez people talk tax, but what we have now is a very good scenario in terms of economic outlook for the economy. I would, because this is a forum of entrepreneurs, I would say that invest into vision and business, which is about a greener future. I think that has a long runway. There is more access to capital over there. There is more acceptance by customers. In fact, the government also mentioned in the budget they want to launch some sovereign green bonds, and that money that they will raise, will be exclusively available to what can be qualified as a green business. I think the future is green. I will restrict at that, and people need to be part of it as entrepreneurs.
Yeah, agree. So I don't think we have many questions here. So thank you for the great session today, Mrinal, and thank you for your valuable time and sharing your insight with us today. I'm sure each one of us had a huge learning from today's exciting and important session. Personally, my key takeaways through this session have been, of course, this service industries and other sectors which are gonna have benefit out of this budget and the growing India story, green. Archana, you want to take it up?
No, I think I really enjoyed Mrinal for your candidness and wit also. I think is a lot of reality check for the entrepreneurs today. And thank you so much for joining us today.
Thank you, guys. The pleasure is all mine. Thank you.
Yeah, thank you, Preeti, for moderating this for Ascent.
And yeah, thank you all the participants for joining us today and being extremely participative during the session. Stay safe, everyone.
Yeah, we have a lot of chat thanking and saying it's an excellent session. So thank you once again to both of you.